Market news now. Asian equities slipped while the dollar hovered around a 6-week high as economic data and hawkish comments from Federal Reserve officials revived fears that the U.S. central bank will stick to its monetary tightening path. In a trading update locally, retail pharmacy Dis-Chem showed a robust trading performance amid challenging economic headwinds, with group revenue increasing by 8.7%. However, the group noted that due to load shedding over the past 6 months, diesel costs across its stores had increased by 54% to 36 million rand. And we also had ABSA, South Africa's third biggest lender by assets, saying that its full year profit was likely to rise between 10 and 15%, driven by strong growth on the back of high interest rates. We have seen South African lenders, one of the biggest in the continent, having a good run last year, but a worsening operating environment in the country, primarily due to frequent rolling blackouts, have dampened the mood for continued strong growth. Increasing interest rates have also led to worries about bank loans going sour in a country that's still battling with high unemployment and anemic growth. To talk to us about the markets and, of course, look back at the week that was, we are joined by Warwick Lucas from Galileo Securities. Warwick, thank you so much for your time. Let's touch in on market sentiment right now, if you're looking back at the week that was, and also what would you say is priced into the markets?
Right, Natasha, I think what is most notable is what an incredibly volatile week we had in the US. We have the perverse situation there that robust economic data is not being welcomed. And the reason for that is that inflation in the US is high and is looking like it's increasingly stubborn. And that, of course, could force the Fed to step in with a lot more interest rate hikes. And most market participants know that you never really want to bet against the Fed that is determined to hike rates and kill inflation. Now, locally, the rand was quite weak this past week, I guess load shedding related amongst other things. But of course, the JSE got quite strong on the back of that. And that's because really when the rand is weak, the JSE gets strong, perverse again.
So let's talk about what is happening stateside, especially as it relates to the Fed. You're hearing these buzzwords coming out of different market commentators, whether it's soft landing, hard landing. I've also heard no landing. Let's talk about no landing, because that's the one that I'm struggling with. And I'm wondering, from your perspective, what would a no landing even look like?
Well, I suspect a no landing is a very strange one, because effectively that would mean that you would have to have inflation fizzle out by itself, which seems like a pretty remarkable event, because you would have the economy continuing to be growing, and yet inflation simply moderates. It doesn't seem right to me. I mean, especially, look, it's not impossible, let's put it that way. I mean, there's something like $6.3 trillion of outstanding corporate bonds, which are coming due by the end of 2025. And, there's a possibility that US corporates will pay those down rather than roll them. So, I mean, that's one thing that might have a deflationary consequence. I would also note that US housing starts, which just came out, they declined in January to the lowest levels in several years, which is also a sign that residential construction is pulling back. But I have to say, no landing to me looks like sort of flipping a coin and landing it on the edge, frankly.
So locally on SENS, we had trading updates from Dis-Chem as well as ABSA. Which of the two caught your attention?
Well, having a look at them both, I mean, the Dis-Chem's trading update, which focused on really turnover type of metrics, I mean, it still looks like some nice defensive earnings there, but the market's looking for a big rebound coming off a low base. So ABSA is showing HEPS earnings growth of between 10 and 15% despite a sovereign debt problem in Ghana. Of course, economic growth is terrible, but a lot of the banks are well positioned for a weak environment anyway.
And it's quite interesting that we talk about, ABSA and Dis-Chem. Over the past week or so, we've had a whole host of companies releasing their trading updates, as some of the JSE-listed companies will be releasing their results. Which of those companies' earnings are you looking forward to, and which sectors?
Okay, so I'm going to be focusing on banks, and the reason for that is that firstly they are relatively immune from load shedding, notwithstanding that load shedding can hurt some of their customers. But they borrow in the short term and they lend in the long term, which works out particularly well in a rising interest rate environment. And the other thing that's of interest to me is the fact that there is scope for them to participate in a lot of new energy projects. Now, I mean, these can be quite good opportunities for banks because they really are very good quality loans. They've got good assets, resaleable assets with stable cash flow, and there's demand. The country badly needs new power. So to me, that seems like a good double case for being involved in banks.
One of the other companies on Sense that had an update was Zeta, and we spoke to the CEO about a month or so ago when the company was listing on the JSE. What do you make of Zeta's performance since listing?
Right, so Zeta is a holding company for Avis in South Africa, and it got unbundled from Barlow World. Now, I mean, it's performed very poorly since that listing, but what often happens when a small company is unbundled from a large one is it simply gets thrown away, as the unbundled shares, they don't fit the mandate of the portfolio managers that often hold it. And particularly for private investors, it can provide an interesting opportunity because the shares really get sold down quite hard and indiscriminately, and that can often go to a point where they offer quite good value. So those kind of unbundlings are well worth watching.
I just want to ask, in an environment like this where there's a little bit of uncertainty, are you seeing any optimism at the end of the tunnel? Is there something that is putting a smile on your face when you're looking at your screens?
I suppose if you've got some offshore portfolios for one thing, but really, I think we're just sort of working through a cycle. As I say, I think banks are a defensible opportunity, and maybe we'll get something. We'll see something in the resources as well. So nothing's ever totally hopeless, but it sure can be challenging.
Warwick, on that note, let's leave it there. Thank you so much for your time. That is Warwick Lucas from Galileo Securities giving us his perspective on the markets and also helping us look back on the week that was. We're going to take a quick break. When we come back, we'll have SME on point with Diabo Sito, so stay tuned.